Thank you, and a very warm welcome from me. Hopefully you can hear me loud and clear. Just switching screens there, apologies. Okay, let's just move the chat box out the way. There we go, down we go. And as always, another interesting day on the US indices. I've got the YM at the bottom here, I've got the NQ in the middle, the one you've just been looking at, and over on the right-hand side, I've got the ES. And if I just pop them up full size for you, there we go. That's what's happening in terms of the YM. We're still trading inside the range of this volatility candle. We haven't moved outside there. We've been there for weeks. We've got this very strong resistance level overhead, lots of volume above, and the market cannot push through there. And we've had this quite respectable down day today, a few hundred points there. Nice straightforward trading. I'll show you that in the faster time frames in a minute. This is the NQ. Completely different chart. You wouldn't think it was the same market, but believe it, it is. Continuing on higher, but having a doji candle today. We've got volume draining away, as you would expect, continually breaking out into new high ground. I won't bore you with that one because Anna's already been through that in detail. And finally, this is the ES, S&P 500. Exactly the same as the YM, nothing like the NQ. Trading inside the range of this volatility candle, been there for weeks. The only difference with this chart as opposed to the YM is that it actually managed to crawl through this level here, which has obviously now become support. You can see it coming into play as of today. So it's acting as support. It was support yesterday. Didn't really figure much the day before, and it was broken through. It was resistance at that point. It became support. So it's being tested right now. It's a pretty decent level. So whether it's acting as support or resistance, there's a lot of congested orders sitting in that region. So you know it's going to act either as support or resistance, depending on which direction it's been tested from. But right now it's being tested as support. But the point is the price chart is so very different from the NQ. So that's where we are in terms of US indices. Over on the right here, I've got the time and sales window. This is running on the ES at the moment. So what you're seeing here is orders flowing through literally down the right-hand side column here. Prices, whether they're going through the bid ask or between the bid and the ask. It's something we're going to be covering in a lot more detail, particularly when we get onto TradeStation. Also be looking at depth of market and time and sales, and also the ladders there as well. So it's something we're doing in great more detail. And what you're looking for in terms of order flow is not so much, you're not really interested in these ones and twosies down here. What you're really looking for is the double figure blocks, anything above 10, 15, 20, whatever market it is. You're really looking to eyeball out the double figure blocks to give you a sense of the weight of buying or selling. And more importantly, when those big numbers go through, if you get clusters of them, to actually get a sense of whether that is moving the market or not, because if it's not moving the market, then that's a sure sign that the market is weak. There's pressure building and the market is weak. And of course, all of that we view through the prism of volume price analysis in the straight linear relationship between volume and price at this region. Now, the one thing I want to do is I just want to pop up the 5-minute here because this is a fascinating chart. This is, and it really encompasses and encapsulates the power of volume price analysis in this single trend lower and also in the reversal. We had the congestion phase. This is obviously 2:30. This is our time, UK time 2:30, when the US cash markets got underway. Prior to that, we're running electronic on Globex through here, absolutely fine. You know, this is all valid volume. We can compare like with like, no problem at all. Then we hit the cash market open and the volume spikes dramatically. We had some trap moves just prior to the open, spiked up, then down. And then we're into the downwards move with this ton of volume. We've got volatility triggers as well. But what I really want to show you is if you perhaps missed the first move, perhaps you thought it was a bit too close for comfort in this congestion phase, you didn't want to get in on a volatility trigger, that's absolutely fine, perfectly fine. We then get this move lower. We get a strong platform of support coming into play here on this blue dashed line. This is on the accumulation distribution indicator, and what that indicator does, these levels are also off the same indicator. In other words, the thicker the line, the stronger the congestion, the stronger the support or resistance area. And it does that automatically by increasing the strength of that line or the width of that line by the number of times it is tested. So the more it's tested, the wider it becomes. So you get this very visual, very simple, very powerful visual display that tells you the strength of these regions. These levels down here, this one's been tested 2 over here. You might not be able to see it. There's 2 here, and this is a 1. It's a bit like conkers if you're familiar with conkers in the UK. Apologies if you're not. I won't bore you with it. But the greater the number, then the stronger the line, basically. So this is a very strong region. Came into act as support. Then what did we see in terms of volume? We had some buying coming in at this level, good volume, nice up candle, bit of buying under here, and up it goes. Fine, no problem at all. Then we get the next candle. Okay, narrow spread, decent volume under that, maybe too much volume under that. We'd expect that, considering this candle has done that. This candle looks a little bit weak. Then we get the next candle, we get higher volume, but what have we got? Narrow spread, wick to the upper body, and we've also got resistance coming into play. So you've got, if you like, the 2 key planks of volume price analysis coming into play at that particular level. So you've got, in other words, a heap of volume being driven in to that particular price region. And what's actually happening? Absolutely nothing. In other words, it's not moving forward. If that were a genuine move, if this price and volume were in agreement, this candle would be up here somewhere. It isn't. It's flat. It's a narrow body to the candle, and we've got a wick to the upper body. So there's a heap of effort going in there, and it's not going anywhere. The analogy we use in the Forex program to explain this is very much like driving a car up an icy hill, if you will. You're trying to get traction, and you're applying more and more pressure to the accelerator or to the gas, and eventually you reach a point where the car isn't actually physically moving. The wheels are spinning very quickly, but the car isn't actually going any further up the hill. You're applying more and more pressure, and you're not going anywhere. And that's essentially what is going on. This is selling into a weak market. This is the insiders, the big operators, the market makers. They are selling into what is technically a very weak market. They're dumping into this, trying to trap people in to go long. They're forcing it into the pipe, forcing orders through the system. And eventually what happens, it cracks. And then it cracks big time. And what do you get? You get bang, bang, bang. You get a perfect price waterfall. 3 candles, increasing spreads, rising volume. That's classic VPA. We then get a volatility trigger, and I'll come on to that because I want to show you one on gold as well. But we get a volatility trigger. It's a warning sign. What it tells you is either to expect congestion or possibly a full-blown reversal. In this case, we get congestion. We then continue down to the next level. Then we get rising volume again, 1.5 tons of volume. And the sort of candles you're looking for constantly are these guys here. If you've missed a move, if you didn't get in up here somewhere and you were a bit nervous, then you see this sort of reaction. These are the sort of candles you're looking for. This pressure candle, lots of volume and weakness, bang, down it goes. Then you're into the next one. We had dojis here. We didn't get one of these. We had dojis, but then we're off down. Now maybe you get in when you get below this level. You know, it's whatever you're comfortable with. But when you get the volatility trigger there, we had no follow through. It doesn't always follow through, but then we're down into the next one. Then we get weakness, more weakness. What have we got? 1.5 tons of volume going into this one, not going anywhere. 1.5 tons of volume going in here, not going anywhere. What do we expect? Is this market going to reverse? No. Why? Because the wicks are to the upper body, and you've got a ton of volume going in. Next one comes, bang, higher volume. You know, it's just telling you loud and clear. This is straightforward selling. Down to the next one. Then we get a reversal. We get a bullish engulfing. So one candle over another. We get a ton of volume coming in. That's fine. Is it going anywhere? No. We get a doji candle, little volume under there. Down to the next one, more volume. Then we're into a congestion phase, which is not surprising. In terms of the rally higher, is this looking weak? Not particularly at the moment. If you look at the volume that's going up, we've got volume that's falling away. Also got to remember we're coming out of the bulk, if you will, over here of the main volume as we get underway. We've had this surge in heavy selling pressure. Now we're moving into a congestion phase. What are we seeing? We're seeing the volume die away. Down here, we're seeing the pressure, we're seeing the price action narrow into congestion phase, because what you expect to see in a congestion phase is now relatively narrow price spreads and also a decrease in volume. So the volume falls away, the price action becomes very contained. We move into that congestion phase, and what we're building there obviously is our support and resistance levels, and then we're looking for a possible breakaway either to the upside or the downside for the next leg of the journey to begin. But for the time being, we are in a congestion period. If it breaks the downside, what we're looking for is obviously an increase in volume. We've got a decent level of resistance acting overhead here. We've got a low volume node below us here at 25.50, 10 points or so below. If we get through there, where are we heading to? The chances are if we're going to the downside, we'll be going back down to the VPOC, down this yellow level here, through this volume, and then we will hit further congestion if we get down to this level, purely because it's back to the volume point of control and we've got this heap of volume sitting at the fulcrum of the market. So I just wanted to show you that because it is a classic example of VPA in action. It's looking at the price action through the prism of volume and price, and more importantly, if you've missed a region and you didn't get into a particular trade, it's then trying to identify those opportunities where you can actually jump into that trade on the continuation of that particular trend, particularly in the bearish phase where you get these efforts to rally, where the big operators and market makers are selling into weakness as the precursor for the next leg down in the trend. Very different on the NQ. What's interesting about the NQ is I mentioned these levels on the accumulation distribution indicator here. When you get them in isolation, this one on its own is very strong, but when you get these clusters here, we've got this one's been tested 8 times. We've got another one below 4 and another one above 4. So this area here at 10,680 is a hugely significant area for intraday trading. If you were trading this as a move to the upside, that would be an alarming area, because if you're going to jump in now, you know, how many points have I got to take out of this market? That may be enough for you, it may not be. In terms of the NQ, you might only be looking for a handful of points. If this was the YM and you were only looking at maybe 10 or 15 points here, then it wouldn't be worth taking the risk, because the prospect is that this market will almost certainly congest at this region. It has to be purely based on price-based resistance, as opposed to this here on the histogram, which is volume-based resistance. Now, in terms of volume-based resistance, ironically, we've actually got a low volume node here. So from a volume resistance perspective, that should move through there fairly easily. But if you overlay that with the price-based resistance, that is going to cause it a problem. And as always, when you're looking at trading opportunities, it's a question of picking out what is the opportunity. It's literally coming up to test it now as I'm talking. It's picking out the opportunities and whether that is going to deliver the amount of risk that you are prepared to put on the table. So if you're prepared to put $100 risk on the table, is a $100 return enough for you? Is it going to be $200? But it's not a stupid risk-reward ratio. It's looking at the chart and analyzing the chart and just getting a sense from the chart perspective, from a technical perspective, as to whether there is sufficient in the trade for you before that price action is likely to run into something significant, either volume-based or price-based. Simple as that. Just have a quick look at the ES. This is the ES on 5. Actually, flick that up to 5 minutes. They're all the same. It's on 3 minutes for some reason. There we go. So this is the ES trying to push higher. Now the ES, we've got no significant price-based resistance in the way. What's nice about this particular trade, if you're looking to take this, is the volume here is falling away. There's very little in the way of price-based resistance. So from an upside move, you know, we could be going all the way up to 3150, which is, you know, a heck of a grab on ES. So moving through here, as this falls away into this low volume node, anywhere through 40, 45, that should move pretty swiftly, because there's very little volume-based resistance and there's very little price-based resistance also. So it's just, I just wanted to highlight this because on the YM, because it is just one of those terrific examples. I couldn't find a better example if I looked for one. You know, trading it, it's just very straightforward to pick out where you want to get in. And of course, this is just one chart. You'd be looking at this, if I was trading this on a 5-minute time horizon, I'd probably have the 2-minute up as well, maybe the 1 minute, and just have the 10-minute or 15-minute for kind of context, see if there's anything serious in the way, you know, slightly downstream of my trading perspective. But it's just an almost perfect example of VPA in action, and also bringing in the other elements of support and resistance and the volume point of control also. Now, the other thing very quickly before I hand back to Anna is, let me just hop over onto gold. I just want to show you something else, if I may. Okay, I'm just going to switch off for a moment. I'm just going to switch screens.